Our next guest projects the Fed will cut rates twice this year at the September and December meetings. Barclays chief U.S. economist Marc Giannoni joins us now. Marc, thanks for being here. So September, December, 50 basis points in all?
Yes, that's right. That's what we have in our baseline. We think the FOMC will almost surely leave policy rate unchanged this week on Wednesday, as it waits to gain greater confidence that inflation is moving sustainably towards 2%. Activity remains very resilient, so that implies no urgency for a July rate cut. But we have seen a lot of progress on inflation. The latest inflation prints look very encouraging. PCE price inflation, what really the Fed looks at, looked pretty tame in June, and for the second quarter showed a big improvement. So we thought that we think it's quite likely, in fact, that the Fed will feel enough confidence by the September meeting to start with a first rate cut.
Do you think we'll get evidence of that in the forward guidance explicitly, or do you think they will remain more measured and say, we're taking this on a case-by-case basis, we remain data dependent, everything we've heard for a while?
Yeah, so this week we don't expect a change to the forward guidance. We don't see any upside, frankly, for the Fed to change its forward guidance. If you look, as I mentioned, the data still looks strong. The market already anticipates a cut, has pretty much fully priced in a cut plus some more, later this year. I think we have about nearly 70 basis point priced in by December. So I think there is no upside for the Fed to commit to a cut in September at this point. And I would expect Chair Powell to come at the press conference and really emphasize again that they're going to take it meeting by meeting. He'll certainly welcome the improvement on inflation. He'll talk likely about some weakening or some cooling, I should say, on the labor market. But at this point, no upside, we think, about committing to a September move.
Do you think that the way that the markets are pricing in a September cut is too optimistic? I ask because we have seen this movie before. Coming into the year, the markets were expecting 6 cuts, and here we are so far with 0. So we've seen these overshoots before. Is there a chance that that might be the case again, or do you see much more coalescing around just the September idea?
So, I mean, we think that the market is getting a little ahead of itself again, pricing in also some cuts or more than a cut by the end of this year. So more after the September meeting, with some possibility of a cut in November also. We think the Fed is going to proceed very carefully, deliberately. It's not in a rush to cut. There's really no sign of the economy falling off the cliff anytime soon. As I said, activity is still quite strong. The labor market still at full employment, with no indication that labor market as a whole is breaking. So we think the Fed is going to move no faster than 1 cut every other meeting. So we see no more than 2 cuts this year.